Now more than ever, it's essential that you invest your hard-earned money because with high inflation, the money on your bank account will evaporate in a matter of time. So it would be wise to look into investment options like crypto and stocks. You probably already knew that, but if you don't know where to start, then this video is for you. My first advice is to keep it simple. A lot of people fall in the trap of using stocks and crypto as a tool to get rich quick. They get inspired by false lies of people that become millionaires within a few weeks. These stories, of course, are BS. They invest tons of money in high risk and volatile coins and they lose money quick and also lose the trust in investing the money. Don't get distracted by those lies. Investing is really about the long game. And I'm not talking about you day traders, because day trading is a different kind of game. It's actually a full-time job. So step number one is start with dollar cost averaging. Dollar cost averaging is the concept that you put in some money every period of time. It can be daily, weekly, or monthly. And what that does is sometimes you'll buy stocks or crypto at a low price, at a good price, and sometimes you buy it for a higher price. But at a longer period of time, price you pay for the stocks is actually averaging out. And it turns out in a lot of studies that if you try to time the market or if you try to do dollar cost averaging, which takes a lot less effort, will only result in a few minor percentages of difference, which is really not worth all the effort. Step 2 is just to pick a few stocks. Don't have this complicated big portfolio. Just choose 2 or 3 stocks and you'll be fine. So that's also the advice that Warren Buffett gives. If you don't know, Warren Buffett is one of the most successful investors of all time, and he suggests that you buy some index fund or ETF, because an ETF is a collection of stocks which already are picked for you, and then you don't have to pick yourself, and they automatically pick out the best ones for you, and that saves you a lot of time. And for crypto, my rule of thumb is to never go for altcoins, but just the big ones like Bitcoin and Ethereum. Spread your portfolio. Even though we are keeping it simple, it's still wise to spread your risks. And what do I mean by spreading risks? Well, some stocks or crypto coins are really volatile, and that means you win money quick, but you also have the risk of losing money quick. And if you choose for a less risk, then you are quite sure that over time the value will increase in small steps, or if it decreases, it also will decrease in small steps. So if you have high risk, it can also be profitable because you can also win money quick. So it's a good spread of both of those things in your portfolio. For me personally, I spend half in crypto because crypto tends to be more high risk, and I do have in stock ETFs, which is steady. Pay yourself first. Pay yourself first is the concept that you pay yourself first, as the name states. So when your salary comes in, as a rule of thumb, you pay 10% to yourself first, and with that money you can invest or save. And the big advantage of this is that you force yourself to first invest in yourself before spending your money on other things, because if you have the money on your bank account, it is very easy to spend it on fun stuff, on new nice gadgets, or whatever you see fit. That also makes it pretty easy because nowadays the stockbrokers have automated functions where you can invest the money automatically. So after your salary comes in, it's very easy for the day after to set an automatic rule to buy some stocks or crypto. And that way you have a lot of peace of mind and you don't have to look back or anything, because everything goes automatically and you will grow your portfolio over time. The other advantage this has is that you're less tempted to look at the broker accounts. if there are any profits, if there's bad news, you tend to look, you tend to get emotional and take your money away. And we don't want that. We want to keep the money on the investment/broker accounts because it will grow eventually over time. And you don't want to pull out any money that could potentially be a high profit. My final conclusion and my portfolio, and of course my most important tip. So we discussed that you should keep it simple and do dollar cost averaging on only a few stocks and crypto coins. You should spread your portfolio in low and high risk investments. For example, crypto as a higher investment and the stock market as a more low risk stable investment. And we discussed that as a rule of thumb, you should pay yourself first 10% and automatically make sure it gets invested in either crypto coins or stocks. My personal portfolio that I will share with you now is that 50% of my portfolio is in crypto, and half of that is in Bitcoin, and the other half is in Ethereum. And for my other half, it's in stocks, and the half of my stocks is in iShares Core S&P 500, and the other 50% is in the Vanguard FTSE All World ETF. That's my portfolio. As you see, 50% is pretty high risk and the other 50% is more stable. And also I promised you my final tip, and my final tip is to shut up your emotions, don't look at the broker's account and stick to the plan, and definitely do not touch your investments. So make sure the 10% you invest is money you don't need and money that you can lose and money that you don't use. So don't touch it. And if you like this video, then please don't forget to like and subscribe, and let me know what are you doing about investing. Are you more into crypto, more into stocks? Let me know that in the comments below. Bye.